What's up, people? Welcome back to Invest with T Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, NEO, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. It has been a little over a month since I covered Virgin Galactic, but I wanted to wait until after the earnings call to have a chance to digest the information and form an opinion on where things stand. The stock price downtrend continues with a loss of 5.28% this week, with the closing price at $3.23. We are down 26.09% over the past month, and so far this year, so year to date, we have taken a loss of 45.07%. It's not completely unexpected, given we are still a ways off of the commercial flight restart, right? That said, it's not all doom and gloom. A lot of good information was shared during the earnings call, along with the progress being made, and that is something to get excited about. So for today's video, I'll go over the latest news with the main takeaways from the earnings call, then go over the analyst ratings. We have some changes here, and I'll close with what I'm personally doing as far as buying, holding, or selling. As always, this is not to be taken as financial advice. I am not a financial advisor. This is my personal approach to investing and the thought process behind it. I'd recommend watching all the way through so that you don't miss out on anything pertinent I will be sharing. Drop the video a like if you haven't already, and smash that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. The earnings call had a lot of good information all around, right? There was a lot of emphasis placed on the progress Virgin Galactic has made towards production of the Delta-class spaceships. They went into quite a bit of details, showcasing the tooling, explaining the manufacturing process, and why they feel confident they can hit the timeline they've given for reaching commercial flight. But to sum it up, 2024 was all about design, and that's fully encompassing of not just the tooling required to assemble Delta, but also getting the factory where the assembly will take place ready to roll, and that of course was a success. Now, for 2025, the focus is going to be all on manufacturing the spaceship, along with ground testing using their state-of-the-art Iron Bird. The Iron Bird is a full-scale engineering testbed for the Delta spaceship system and electronics. The main benefit of using this approach is the shortening of the testing timeline, which in turn means that they can get to flight testing even faster than what was possible before with the old Unity spaceship. More specifically, assembly of the Delta spaceship is currently underway at the Phoenix factory. The next big step will be ground testing, which can be expected around summer, fall, somewhere in there this year, right? Now, remember that they're building two spaceships to enter commercial flight in 2026. So for next year, the key milestones are the first flight test in spring, followed by the first research space flight in summer, and finally, the first commercial flight with private astronauts on board in the fall. It is important to note that there will be multiple flights in between each major milestone. The cadence, however, will not reach the full-scale capability of 2 flights per week until we get into 2027. The plan is to gradually ramp up throughout next year. So my takeaway here is that the plan is solid and management did a great job conveying confidence in their ability to deliver on it. The other big news here was on the financial front. I'll save you all the numbers, but the punchline here is that both operating expenses and net loss were both lower on a year-over-year basis, and by a decent margin by that. That is exactly what they had guided to, with the expectation to further pare back on spending this year as they now shift to manufacturing versus the higher cost of R&D last year and the year prior. That's exactly what we want to see, meaning that the $657 million in cash they have on their balance sheet plus the $300 million they can raise through stock offerings should truly be sufficient to reach commercialization. Look at it this way. Even if you take the high end of the projected Q1 cash burn of $125 million and carry that through the entire year, right? It still only ends up being $500 million spent. It's also worth noting that they already raised $138 million of that $300. They clearly stated during the earnings call, and this is something important, that no new stock offering program beyond the $300 million had been filed, meaning that as it stands, we can expect another $162 million in share dilution between now and 2026, and that's it. That's big news. The bottom line here is simply this. the cash burn is slowing down, manufacturing is ramping up, and the plan they laid out seems more achievable now than ever. And if they execute the way I expect they will, and are able to capitalize fully on the business model they laid out, as you can see on the screen here, they are essentially on track to turn cash flow positive in early 2027. Now, think about that, okay? I'll come back to that thought and its implications in just a moment. Now, of course, 2027 is still a long ways off, and a lot can happen between now and then. But that is precisely why we are looking at a consensus analyst rating of hold instead of buy. And so as we take a closer look at the makeup of the ratings, hold is an improvement from the moderate sell we had previously. The recommendation is made up of 4 ratings versus 6 prior. We still have the 1 buy rating, and now have 3 hold ratings versus 2 prior, and the biggest change is the 0 for sell ratings. The 2 sell ratings we had before have been dropped. The high end of the price range has increased significantly from $9 to now $36. The low end is also higher, now at $3.25 versus $1 prior, the last time when we spoke. And the average price target, to no surprise, is also higher at $14.58 versus $6.75. That's over double, okay? This translates to a ridiculous 351% potential gain from the current level. So a lot of interesting things have happened in the last month, like since we last spoke. But what do I make out of all this, right? As I said earlier, the Virgin Galactic executive team did a great job showcasing the progress being made towards commercialization, but most importantly, driving confidence in their ability to meet the timeline they have laid out. The analyst consensus rating and the price targets do reflect a cautiously optimistic view, but it's still too early to get fully bullish. Another thing to consider is dilution, and dilution was and is my biggest concern when it comes to Virgin Galactic. But things are different now. The stock price decline due to multiple at-the-market offerings have now dropped the stock price back to a more appealing range. And if you recall, in a video where I covered the reverse stock split, I told you that this would happen. Now, for the last point that I'm paying attention to, the most Virgin Galactic can still raise by diluting shares is now capped at $168 million. But more importantly, they may not even need to draw that card if they launch in summer of 2026 as planned. But even if they did, the excitement and momentum that will return as we near the first commercial flight should more than make up with the stock price appreciation, right, as things move up. So for me, it's time to start building back my position on Virgin Galactic. This is not a jump into the deep end, buy all the shares right now, but rather nibbling here and there as the stock price hovers around this level or goes a little bit lower. I've already started by adding my first 100 shares since the reverse stock split went into effect. So it's been a while, but this week I bought my first 100 shares. Accumulating the stock here a year ahead of the hype train getting underway should allow me a fairly sizable position come 2026. Now remember, the goal is to buy low and sell high. And I think at long last, we are finally nearing the bottom for this stock. And for that reason, and the fact that we're tracking well to plan, I am once again a buyer. And that is where I stand. But on that note, that is it for me today. If you found value in my content and feel so inclined, leave me a tip using the thanks button at the bottom of the screen. Remember to click the like button and share with others who you think could also benefit from it. For my newcomers, subscribe, it's free, and don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video and possibly during the week for an extra one. Till then, you can keep up with me here on X for crypto and NFT related news. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.